Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a biotech company mixes cutting-edge science with a bit of Wall Street magic? Well, today we are diving into PDS Biotechnology's latest report. Let's find out if they're cooking up a breakthrough or just brewing another batch of corporate jargon. Today we're dissecting an 8K filing from PDS Biotechnology dated March 27, 2025. This report is like a quick snapshot of important events, so let's see what's new with them. The main point of this report is that PDS Biotechnology, which we will call the company, put out a press release about their clinical programs and how their money situation looked at the end of last year. This report is basically sharing that press release with the Securities and Exchange Commission, also known as the SEC. This report includes a copy of the press release as Exhibit 99.1. Just so you know, this information is considered furnished, meaning it's being provided, but not officially filed. The difference is important legally because things that are filed have a higher level of legal responsibility attached to them. Now let's talk about what is included with this report. Besides the main part we just discussed, there's also something called an interactive data file, which is basically a digital version of the report. The report was officially signed off by Frank Bedu-Addo, who is the President and Chief Executive Officer of PDS Biotechnology. So he's the top boss there. Now let's dive into that press release to see what is going on. PDS Biotech gave an update on its clinical development programs and reported its financial results for the year that ended in December of 2024. The company's CEO, Dr. Bedu-Addo, talked about the significant progress in their clinical programs, specifically highlighting a Phase 3 Versatile-003 trial for PDS-0101 that is aimed at treating a specific type of cancer. He also mentioned advanced myeloid cancer. The company also seems excited about their collaborations with big names like Merck and their plans for future clinical trials. Now let's dig into the money side. The company reported having about $67.4 million in cash at the end of December of 2024. They believe that this amount of money, along with expected money coming in, should be enough to keep the company going until the middle of 2026. So it looks like they have enough cash to operate for about another year and a half. Looking at how they spent their money in 2024, research and development costs totaled about $31.4 million, which is up from $24.4 million the previous year. That's an increase of $7 million, or roughly 28%. That increase is mostly because of higher costs for clinical trials and manufacturing. General and administrative costs, which is the cost of running the company, were also up from $10 and $2 million, to $2 million increase, or about 20%. This rise is mainly due to increases in payroll and other employee-related costs. The company reported a net loss, which means it spent more money than it earned, of $41.4 million for 2024, which is bigger than the $33.6 million loss they had the year before. One thing that might make your eyes cross is something called the change in the fair value of common stock warrants. This had a positive impact of $0.3 million in 2024, compared to a negative impact of $2.8 million affect the company's cash position. But it does affect the overall reported profit or loss. It is related to how the company accounts for certain, but it does affect the overall reported profit or loss. It is related to how the company accounts for certain stock-related items. Net cash used in operating activities totaled $39.5 million for 2024, compared to $32.7 million for 2023, an increase of about $6.8 million. The company believes its cash on hand, along with anticipated receipts from collaborations, will fund operations into mid-26. So after analysing this report from PDS Biotechnology, it's clear they're heavily invested in their clinical trials, particularly in cancer treatments. The increase in research costs shows they're serious about developing their drugs. However, they are operating at a loss, but the company seems to believe they have enough cash to keep going for a while, thanks in part to their partnerships. Whether they can turn their research into profits remains to be seen, but they're definitely in the game. Keep in mind that investing in biotech companies is very risky because it takes them years to develop drugs. Thanks for tuning into Corporate Decoder. If you enjoyed this breakdown, hit that like button, drop a comment, and subscribe for more deep dives into the world of corporate filings.